Good morning, guys. Today is May 24th, and after a few days of major sell-off, and I'm gonna make a technical analysis, and I think that today we have at least 70% probability of bouncing during this week now. And I'm gonna show you guys how to buy the dip like a pro. Okay, now there's a few things you should never do when it comes to the market. You should never buy a falling knife, and I've learned that, and especially if you're a beginner, you should always try to stay away, try not to take action in the market when you have massive movement, big momentum, or pattern break, triangle breakout, trend line breakout, channel breakout, because usually on this moment the market move way too fast for you to go ahead against it. You can try to trade against the market when things are moving a little bit slow, but not when you have those major things. Now I am bearish. It's been 3 weeks from now, the moment this candle right there pre-now disclose, I was bearish until further notice, of course. And this morning we're gonna go ahead and review some key point. The most important thing in the market right now, and this is the most important technical analysis pattern, is this downtrend line on our side. Let me point this thing for you. Okay, I think I've shown you this, and I'm gonna keep doing it until you guys understand how important that stuff is. This is the beginning of the downtrend line, right there. At that moment it became a potential downtrend line, and here it became a confirmed downtrend line on the RSI, and this is what we had as a major sell-off. This thing right there, when we were there, I told everybody, in order for the bull market to resume, when we were there, actually I've told you, because this start like somewhere on February, and I've told you, you can go on the channel with you all the video, that we are in a sideway movement right now. Okay, and I've told you that this is keeping Bitcoin from going up, and in order for Bitcoin to have major bull run again, we need to go through this downtrend line. And what happened is that this downtrend line reacted for a fourth time and gave us that major sell-off, and this for me was the beginning of a bear. So the other thing is a MACD on weekly time frame. A MACD on weekly time frame is not a buying or a selling signal, but when the trend is, when you have a red histogram, this I don't trade against it, because this is a big time frame, and I do not trade against MACD on a weekly time frame. For me, this MACD crossover was a reason to not buy or close long. Now, I was extremely bullish, just like many people, but the reason why I sold is because I got stopped out, because I can move the stop loss in the direction of the market, but you should never move it down. This is not what the stop loss is here for. So I got stopped out somewhere here, and then that stop loss literally saved me 45% profit. And these are the principle. If you're here for trading, you gotta respect those things, otherwise you're gonna bleed. It doesn't matter which trend, if it's bullish or if it's bearish. Now, the other thing I want you to pay attention is that on a daily time frame, this is an unbelievable bearish market, and it's just that there is no real bullish signal right now. So on a daily time frame, we start having those higher highs. So we have one here, second one here, third one here, and then a fourth one here. And this is a first diversion number 1, diversion number 2, diversion number 3. Okay, with 3 decent diversion on the daily time frame, you gotta be careful. But since the moment we enter this range right there between 45k to 63,000, I call a sideway market. I was not bullish and I was not bearish. If you guys remember my analysis, I call a sideway market. But for a sideway market to maintain its momentum, we had to stay in between a range. That's the number 1. The range is important. We got to stay between the range. And the number 2 point about a sideway, we had to squeeze this range. So something like this should have happened. But instead of that, we close here and I said bear market is done, and then I was bearish. That was another reason for me to go bearish. Okay, now when we close on the 200 moving average, that was another bearish signal. So this is bearish. That was another bearish signal when we close under, and then we literally spent 1 2 3 4, and today that's 5th day. That's the 5th day under the 200 EMA daily time frame. Now here's what you need to understand. Every key situation that turn a bull into a bear turn into a situation that the bull need to win. For an example, that 200 moving average is now a major resistance in the market. And the same situation is yesterday we closed under the 21 moving average, and that 21 moving average is now a strong resistance. Now it doesn't matter if you're bearish or bullish. What we all agree on is that we're gonna probably have a bounce. The reason why we're gonna have a bounce, and this bounce is the bounce, I call it the bounce of final decision. After this bounce, you don't have the right to be wrong about the trend. Okay, now the first thing I'm gonna ask you to pay attention to this point right there, and this is where I think this week we have 60 to 70% probability of bouncing. Okay, and this is why I always tell my friends that this mindset of buying the dip is for idiot. You don't buy the dip, okay? You buy a pattern, and preferably a reversal pattern. Okay, reversal pattern. Okay, buy the dip is for idiot. So market is going down like crazy. You need a clear reason. To change your direction and say, well, this thing right there might be a swing being built. Okay, so in a 4-hour time frame, and this is a big time frame, as you can see right there, we are somewhere between $56,000, and this is literally 30k. This is a big time frame, you know, and the 4-hour time frame can take a week before changing its constitution. So the most important thing here is this downtrend line. I think I've posted that in the community in which I am part of and we're trading together. This is a downtrend line, and you have the beginning of this downtrend line here. This is one reaction, this is a second reaction, this is a third reaction, and this is literally a fourth reaction. Now, the reason why you need to understand this is that the more a trend line or support resistant react, the stronger it gets. And because of that, a break is important. So this break that we had yesterday, Sunday, yesterday was Sunday, yeah, is extremely interesting and very important, because we close over So we break it, and then this is the candle of confirmation. So in the next 3 hour and 40 minutes, it's gonna be a real break or not a real break. Now, the reason why this is important is because this can literally turn into a reversal pattern. Now, we're not gonna go ahead and buy yet. The number one and the biggest sign of reversal, it doesn't matter if you are Elliott wave counter, it doesn't matter if you are trend follower, pattern trade, it doesn't really matter. Every single reversal start with a wave that return on itself 100%. I'm gonna show you. This is the last wave. All right, this is the last wave, and this is the beginning of the last wave, that the last wave down, and this is the lowest point of this wave. A clear sign of reversal is if we manage to trade somewhere here. Okay, so this is a bear market. Bullish signal are less likely to be right, and bearish signal are most likely to be right. With that being said, if you see a descending triangle, I've seen beginners make that mistake a lot. If you see a descending triangle in a bull market, you are probably wrong. It can still be a descending triangle, but descending triangle are extremely rare in a bear market. This is what this is the kind of thing that comes with experience. You realize that you need to focus more on signs that are in the direction of the major trend versus those that are against the trend. That's the reason why in a bull market you'll see people losing money shorting bearish diversion on RSI. You don't even have to care about bearish signal in the bull market. This will save you a lot of money. This will prevent you from losing a lot of money. So with that being said, if we have an head and shoulder on a 4 hour time frame, something like that, let me show. Wait. I need to put this. So if we have a sign of reversal on 4 hour time frame, even if it's a clear sign of reversal, you're gonna still need to be careful. You need to wait for that stuff right there. We need to trade over here. If we don't trade over here, we still gonna have to wait. So we can do something like that and create a reversal. Okay, now this is what we buy. We don't buy dip, we buy pattern, we buy reversal pattern. Now, since in my opinion this is a bear market, and the bear can be very surprising, and the bear usually persists a lot, so the other possibility is that this thing right there turn into a descending triangle waiting to blow down in a few weeks. Okay, so if this is the case, we're gonna be able to trade. You're gonna have possibility to enter day trade positions somewhere here. So if this is gonna point out a descending triangle, we have two major day trade positions. If not, we're gonna enter into a reversal. So with that being said, in the next today and tomorrow, I'm gonna pay attention to this level right there. If we trade behind it, then we're gonna expect I can expect a bounce with not just 60 to 80-70%, but literally in the 90% probability. But if we don't trade over there, we're gonna go back into the probability of printing a bearish pattern with continuation. If this descending triangle form to this week, then this is gonna be a sell-off for 85% probability to sell off. Now this probability, I don't make them, guys. You can go on Google, you can literally type what is the probability of going down with descending triangle. They'll tell you it's 85. So this is what we are doing right now. So today I might not take a trade. This is just forcing the market. I need a clear pattern of reversal. The most and the biggest signal is if we return 100% on this wave right there. This is the most important thing. Now, other important point is that this is MACD, as you can see. Another sign of reversal is this is the MACD signal, and this is the MACD line, and this is the MACD signal. If those two lines, and this zone right there is the baseline. If those two lines go over, that would be another reason to consider reversal, because as you can see, before the major drop, we were still in this side of the MACD. When we go there, we literally go in the negative side of it, and this, I don't trade against that. Just don't. Okay, so one thing what I'll just show you here, I'm gonna show you the exact same thing on a daily time frame. Okay, so on a daily time frame, I'm gonna show you. This is the last shot. I'm gonna take my time to explain, and I'm pretty sure that you're gonna learn a lot from this analysis this morning. We've been going up since May 2020, and that was the halving. As you can see, no wave ever returned 100% on itself. So this is a wave right there. It doesn't matter. I don't have to count the wave, guys. This one almost did it, but no wave never go back and trade under the beginning of the previous one. Same situation here. Okay, this is the lowest we retrace. Same situation here. This is the lowest. Same situation here. This is the lowest. And even in a sideways market, it is extremely rare. But this, guys, was your warning. See, we start here, we go higher effectively, but we did manage to go back and start trading under the beginning. For me, I got stopped out here, because since many of you have been asking me, how do you move your stop? That's how you move your stop loss. If you did take a long here, we print a wave, your stop loss was somewhere here at the beginning of this wave, you move it there. We print this wave, we move, and then we print another wave, you move your stop loss from here to here. This is how we ride a swing movement. And then after this, we print another wave, and then I move my stop loss from here to here. We print another wave, because even in a sideways market, if the sideways was bullish, the sideways would have persisted, even squeezing somewhere here, but no wave should have retraced 100% on itself. It doesn't matter what wave it is. If it's part of a bigger switcher, it just doesn't matter, because you need to protect your gain. You've been, for an example, if you open a trade somewhere here, you are in a trade for almost a year now. I'm not gonna wait that we go down to 30k to close a long position. No, you need to protect your gain. Okay, guys. So when we had this wave right there, this one, I move my stop loss somewhere to there. And then when we print out this wave right there, I was very when we have this all-time high and we were retracing, I did move my stop loss here. I didn't even wait for confirmation, because in my mind, this is a sideways movement. We're gonna stay over this range. I did place this range and I was waiting, and I did get stopped out, and after that, next thing you know, we're dropping. So I'm not the only one doing this, and that's one of the reasons why it works too. So on a 1 hour time frame, I don't really take action in a 1 hour time frame if I don't see a clear sign of reversal. But there is another danger here, and the danger is that on a bull market, before I go there, let me just go ahead and show you. Okay, on a bull market, for example, you can pay attention to this. And when we're gonna talk about RSI, when we're gonna talk about RSI, you'll realize that on a bull market, the 1 hour time frame tend to be overbought more often than it tends to be oversold. See what I mean? For an example, you have 1 year here, here, here. This is definitely 1, 2. Okay, but in a bull market, pay attention. In the same lapse of time, this is 1. In the same lapse of time, you just have 1 here, 1 here, and 1 here. See, this is one of the things that I keep telling my friends, that it's not it's a set of behavior of these indicators. That's how you learn over time. That's how the experience come. When you have enough experience, that's how you understand. It comes with time. Okay. Now this is what was before. Let me show you what we are dealing with right now. Same situation. We're gonna take a big lapse of times from this entire month of April. So when you are trading, when you are trading, you literally create a set of behavior that show you that so when you're trading, you use many indicators to tells you a little bit what is most likely to be the trend of the moment. And this is what I'm gonna show you here. If you can take the lapse of time from the beginning of the month of April, somewhere here, how many times do we went over sold? No, this is the last time we went at the highest. That was the all-time high. Okay, so that was the all-time high on Bitcoin. So we're gonna take this lapse of time, and as you can see, yeah, this is definitely 1. Okay, this is 1, and versus just 1, 2, and now 3. Now there's the danger here. In a bear market, the 1 hour time frame spend less time overbought, and traders are waiting for this signal to enter short position. Okay, we move from oversold to overbought very fast. This is a bearish signal. See what I mean? Because it should be a grinding behavior, something like that. So we move like this. Now this is not a bear signal, but since it's just in a 1 hour time frame, we not gonna, I keep that in my mind, but not for reversal pattern. So this is where we are. I think that I've kept my analysis pretty neutral, even if I am bearish, so you can have a clear and objective view of what's going on right now from a technical analysis perspective. So guys, I know this was longer than usual, but I guess it was needed. Have a good one and take care. This is probably the only analysis of the week. Take care, have a good one. If you like this video, remember to subscribe, like, and make sure that you join Virtual Beacon, where we do lots of analysis. There's bullish analyst here, there's bearish analyst here, and different type of trading style, fundamental analyst too. So you can learn. It's a learning community, no financial advice, only learning community. So we get together and and read and make analysis and share ideas. Alright guys, take care and have a good one. Bye.